Hello and welcome. You're watching KYC, and today is going to be interesting if you like turnarounds, because this one could well be a very large turnaround if it were to play out. They are penciling in a top line which will likely double in 2 years. It's an established company. We're talking about Balaji Amines, and this could well be the play if all of this plays out in terms of what they are gunning for. Let me first start off with what I want to know. The first thing, what's been tepid and what's keeping a lid with regard to stock price action today is the fact that volume growth hasn't been seen even in Q1FY26. So can volume start to pick up going forward is the first and foremost thing I'd want to know. And if not going forward, what is the visibility like with regard to volume uptick? Second piece, new capacity. They have put out 2 new plants over the last 3 months, and how and when does it start impacting the top line of the company is what I want to know. Third one, Chinese dumping and destocking. One is Chinese dumping, the other one is destocking from global players. This is where the pressure on Balaji Amines is coming from. How are they dealing with this, and how far are we from a revival on both of these metrics or on each of these metrics? FY26, what are pricing trends and expectations that we are looking for? FY26, is there a scope for margin recovery? Are input prices looking better, likely, and therefore even if there is no top line tailwind, could there be a margin tailwind we could see? And how confident is the 3,000 crore top line and the 19% margin guidance for FY27 looking at the back of everything that's played out? I'm Hersh Sayta. Joining me today is Varsha Chandnani. As always is the case when it relates to chemicals or pharmaceuticals, and therefore I'll hand it in her capable hands to drive us through what the company does. Balaji Amines, Varsha.
Thank you for that. So, before speaking about what Balaji Amines does, let's just, focus on what are amines. So amines are chemicals used, primarily as solvents in pharma and agrochemicals, and the applications include your solvents, which derives almost 44%. You have pesticides, your animal and feed additives. So these amines are used in solvents, pesticides, and feed additives. Now, if I were to talk, so nothing but they are basically solvents. That's it. Now let's talk about the market size. If you see the global...
But sorry Varsha, I am interrupting. What are solvents?
Nothing, you just binding...
It's a liquid. Which ensures that your formulation is derived correctly.
Correct.
If
yes.
that is the correct explanation.
Yes.
But yes, for the viewer, that's what a solvent is.
Yes,
because
correct.
You say solvents in a very easy fashion. It's slightly difficult for some of us laymen to understand that. Anyway, please go ahead.
Okay. Now, talking about the market size, so a global amines market size, if you see, stands at around $4.9 billion, and top 6 companies control 50% of the global capacity, and we'll see why. And China leads with 60% of global production and consumption. Now, what is the moat and why there are only few players when it comes to, amines industry? Number one is, it's the amines itself is very hazardous when it comes to transport. It's very corrosive and highly, flammable, making transport very risky. And so this is one of the reasons why you have only 4 to 5 players in the world. And in India, you have Alkyl Amines and Balaji Amines. Now, technological expertise, if I were to talk about, limited company, possesses technology to manufacture amines. For example, Alkyl Amines partnered with Western players for technology, but Balaji Amines, developed its own technology when it comes to, amines technology. Now, the other point why there are only few players in this industry is this amines require very high capex, and significant investment is being required to set up these facilities. Also, when your amines or when your product is being used in pharma, in agro, all these MNCs, they require regulatory approval, or I would say customer validation. And this takes 2 to 3 years of customer validation. So if Balaji Amines were to supply amines to XYZ company, that XYZ company will require 2 to 3 years to check whether the amines produced by Balaji are good enough for them. So 2 to 3 years is the gestation period, I would say, when it comes to amines industries. Also now, so this is basically what amines are and why there are only few players in this industry and what is the moat behind this company. Now, talking about Balaji Amines, so they manufacture aliphatic amines and derivatives. So you have amines and then you go down, you derive products, you would say value added products or derivatives from those amines as well. So companies make amines and its derivatives. Now, for example, talking about amines and specialty chemicals, what they make methyl amines, ethyl amino, ethanol, etc. Don't go by names. These are used in pharma, agrochemical, rubber, pesticides, rocket fuel. Who are the clients for these companies? When you say pharma, you have Cipla, you have Piramal, you have Thermax, you have Lupin, who uses amines from Balaji amines. Now, talking about the amine derivatives, let's go one step down. From amines, they manufacture derivatives, and these are used in pesticides, performance chemicals, animal feed, your specialty chemicals, and these are used by who are the clients? You have Sun Pharma, you have Walk Hard, you have Ipca, you have Aarti Drugs, using these amines derivatives. Now, a very useful piece of information. One of the challenges that this industry may have or this industry is going through is that customer is becoming a competitor. For example, Aarti Drugs is coming out with its own amines facility or amines capex. Your customer is itself going into your product. So this is one of the challenges or one of the risks that the company has. Moving on, if I want to talk about the specialty and other chemicals, there are acetonitrile. You might have heard this number of times, anti-dumping duty on acetonitrile. So these are all the chemicals which are used in your water treatment, in your pesticides, in your pharma intermediates. And if I want to talk about who are the clients when it comes to specialty and other chemicals, you have Indian Oil, you have GAIL, you have Zydus Life Sciences. So overall, if you see, we have amines. What are amines and what are the products when it comes to Balaji Amines? So pretty good company when it comes, because only 4 to 5 players, Hersh, in the globe. So, and this company has developed their own technology, the other good thing. Now, the other thing is, because of the challenges that the industry is going through, Balaji Amines is no exception to this. But also one more thing, very small portion of revenue, comes from the hotel business that they cater to, and that's one of the reasons. We'll talk about this while valuations,
Okay.
Their hotel business.
But so they have a single hotel.
Yeah.
Right. And how much of a focus is that with regard to where the business is concerned?
So
Do they focus too much?
No.
Not so much.
So the good thing is, not much capital has been employed towards hotel business, the good thing in the recent years. So that's the good thing. And also the specialty chemicals, we should, we might ask to management, they were expecting IPO for specialty chemicals. So let's see where they are when it comes to
that could be some value unlocking opportunity. But let's quickly look at the metrics that we will talk about when it comes to our Balaji Amines. We'll start off with the income statement, the balance sheet, the cash flow, return ratios, shareholding, street cred. There's no street coverage, or rather just 2 analysts cover this counter, and therefore we've excluded that. And then there is outlook and valuation. So we'll speak about all of that. But let me have Varsha start off with the income statement. Varsha, can I request you 2 things? So when you are talking about the income statement, give us perspective. The numbers are already on the viewer's screen. What's happened? And what are the key drags that the business, or the headwinds that the business is facing, that we're seeing the kind of numbers that we are seeing? 2,400 to 1,400, and doesn't look pretty, right? Yeah,
exactly. So what we'll do is, first I'll just go through, how the numbers have been. One thing, and we'll also focus on margins. Look at the margins from 26% to 19%. We'll talk about that also. But first thing is why the revenue numbers or the net profit numbers have gone down drastically. Now, this is true across industry. You have global chemical downturn that you're seeing, which has been impacting every chemical company. Now, this faced a significant slowdown post COVID-19. This impacted demand across various end user industries, like you have agrochemicals, you have pharma, which consumes amines and specialty chemicals. Now, the agrochemical sector, which is now the key focus over here, is the agrochemical sector, which is a key user of amines, experienced volatile demand due to inventory destocking, due to China dumping, due to erratic monsoons in certain regions, and due to the pricing pressure because of the dumping and because of the destocking. You had the end product price went down, and this affected the revenue for these companies. So overall, because of the pricing pressure in the overall chemical industry is one of the reasons why the numbers for the Balaji Amines and even for alkyl amines doesn't look good. But talking about the margin, so this is where the interesting point is, why the margins have gone down significantly. Look at there. In FY22, the margin were like 27%, which has gone down to 15%. Now, the one thing is, this was clearly evident that 26% won't last even for, alkyl amines. Alkyl amines showed margins of around 33-34%, which was not sustainable, as said by management of these companies. Now, why? Because the spike during FY21 and 22 that you're seeing is due to acetonitrile price surge. So the end product price, that is acetonitrile that we were speaking about, a chemical which is used in your pharma and agro, and in water chemical as well, the prices of that product surged. So it surged from 160 per kg to 280 per kg, and this is one of the reasons. And why it surged? Because of the high pharma demand, and this is one of the reasons your margins spiked up drastically. And when the end prices of acetonitrile gone down, the margins have also gone down, coupled with the pricing pressure across industry. So so overall, if you see, the company has not done good, and this is one of the reasons why we are giving thumbs down.
Very simply put, three factors: China dumping, some bit of stocking up which had already happened during COVID, the unwind of which hasn't yet happened, and higher raw material prices. Those are the three factors why you're seeing what you're seeing on your screen. The profit hit, as well as the top line being hit, as well as the expense line being hit. So all three have been hit adversely because of this. Okay, so broadly that's the take. Let's talk about the balance sheet, and now we'll move fairly quickly because we're now behind the most important part of this discussion. The balance sheet, around 1840 crore in terms of equity shareholders funds. We are sitting at around 5000 crore in terms of market cap. So that's the price to book. There's no borrowing on the balance sheet, fairly clean balance sheet per se on a standalone basis. There's no debt which is likely to be taken as well in the future. Maybe to fund some bit of capex, a subsidiary might take on 150 odd crore of debt, which is honestly very, very minimal. So really no concerns. You look at the cash and bank balance as well of 360 crore. There's enough room there as well. So broadly, that's how the balance sheet looks. But the cash flow, Varsha. Yeah, so cash flow, Harsh, as you in starting you had pointed out that company is doing a lot of capex, and that's one of the reasons the net cash flow is negative, because they've done a lot of investments. So if I were to talk about in 2024 and 2025, the cash flow from investing activities in 24 was almost 274 crore. Then it came to 140 crore. So because companies doing a lot of investments, you're seeing the net cash flow either a negative or very minimal amount of net cash flow with the company. So overall on the cash flow statement, we would give a neutral stance because of the investments that the company has been doing. And even when I'm talking return ratios, the headwinds you're seeing on the income statement is translating on the return ratio. So we had very, very good tailwind till FY23, numbers reflecting on your screen, 36% ROC. If I push it back to FY22, it was north of 45% ROC. So very, very strong, but it's fallen to 11%. The recovery completely depends on the three factors we spoke about on the income statement side. So you want to monitor that. Shareholding pattern, Varsha.
Overall, shareholding pattern, I mean, it's kind of thumbs up, nothing much dramatic there. Promoters' stake has been increased a little bit, that's a good thing. FIIs have maintained their stake at almost 5%, and even DIIs, if you see, has been maintaining that stake. So overall, it's a thumbs up when it comes to shareholding pattern.
Okay, let me take you through street cred. The last 1 month stock is down 20%, last 6 months 12% down, year to date 15% down, 1 year 33% down, but 5 years the stock is up 2.5x, and that's what's driving possible profitability, at least for the longer term investors who are likely to hold on better. So we've given this a neutral. Short term, of course, we've seen pressure. Varsha, both outlook and valuations.
Yeah, so starting about, outlook, so they're targeting 3,000 crores of revenue in 2 years, and with the expected volume growth was 10 to 12%, especially as the new capacities ramp up in FY26 I'm talking about. EBITDA margin expected are 19 to 20%, and the total capex that they're expecting standalone, not considering the specialty chemical, is 200 to 250 crore over the next 2 years, which is already in focus, in progress. Lastly, on the valuation side, if you see, now comparing with alkyl amines, the valuation is at a discount. Now, there are many reasons for that, considering the management pedigree, and of course, because of the investors' concern about the hotel business, and also the when it comes to the net profit, or when it comes to all the financials, the weak financial that the company has seen. So all these parameters, have led to, I would say, a discount valuations compared to alkyl amines.
Okay.
Now, so company has to prove, for that premium valuations for Balaji Amines, yeah.
Yeah, but the likely silver lining in all of this is the fact that if they do a 3,000 crore in FY27 with a 20% EBITDA margin, that will mean 600 crore in the kitty. That is phenomenal, because that will in itself mean that the company is flushed with 1,000 crore of cash. Not just that, enough to do the very small capex that they are expected to do, and further leverage on the opportunities available. So that's how the rating parameters stack up. We've given valuations a thumbs up only for that reason, with the potential turnaround opportunity which could come about. We'll get a better perspective as we're joined by management. 4.5 on 8 is what this one gets. We're joined by D Ram Reddy, who's the Managing Director, Balaji Amines, joining us. It's a pleasure having you. So first, give us a perspective on how Q1 has gone for you, and what set up the context for us for FY26. Both in terms of volume, what price trends are you seeing? What should we expect in terms of top line, because you've added capacity? Just give us a quick color on those factors.
Thank you, Hersh. See, actually, in spite of many hurdles, you know that the chemical industry and as pharma industry is going in very different windfalls. So we have done par with the last quarter, as well as if you compare with the last year also, the same margins, 19 to 20% you maintained. And actually, there's a improvement has started. Last 1-2 months, we have seen that uptake has improved. But again, we have seen some of the volatility because of this tariff news. And second thing, because of the dumping from the China, we have applied for some of the products for the anti-dumping. And also, we have learned to live with whatever is available if we are not getting the benefit of anti-dumping. So there's a reason, in spite of all these things, we have made same. And we expect in coming quarters, there should be, because as you rightly said, there's some capacities will be coming into the stream. Actually, one capacity has just came about 2 weeks back, 2 to 3 weeks back. That is isopropylamines. That is doing well. And this dimethyl ether, which is plant is ready, but we are fighting for the, I can say the fighting word only, because when we make any product first time in the country, there are a lot of hurdles are there in the approval point of view. We are waiting for the PESO approvals for the storage and transportation of this product, dimethyl ether, because it's an alternate to the LPG. Actually, BAS has already given the go ahead for the blending of 15 to 20% blending of dimethyl ether into the LPG. So we are expecting these should come in this quarter. Then this plant will start. And after this, there are the 2 more plants in the pipeline. One is the N-methyl morphine, again with the new technology we are coming up. And another product which is the old product, acetonitrile, we have taken up the
Right.
dumping up. That is also coming up by end of the year. These two plants will come into the
Right.
stream. So there will not be much up in this year, but definitely next year, as we
Right.
said, the 27, there will be definitely, we will reach to the 3,000 crores, what we said in the earlier call.
So, Mr. Reddy, hi, this is Varsha this side. Pleasure to have you. So, you are expecting 3,000 crores by FY26 with 19 to 20% of EBITDA margins. Got that point. Also, Mr. Reddy, you were expecting 10 to 12% of volume growth in FY26, and now in Q1, year on year, the volume has decreased. So, just wanted to have your view on overall outlook when it comes to volume and, of course, the pricing trends that you are seeing.
I'll tell you, see, if you look at the consolidated basis, at subsidiary level, we are having two activities. One is the brownfield modification of the plant. Other way is the greenfield expansions are going up. These both activities are taking place. That's the reason nothing is happening in the top line point of view at subsidiary. That has impacted on the total top line, even volume growth also. We have seen marginal last quarter, this quarter, there was about 800 to 1,000 tons increase in the volume growth. But going forward, because one plant we have started and other plants which are gearing up, so we will see, as per the our guiding, about 10 to 12% volume growth should be there. And what we have seen in the last 1.5 months, there's an improvement in the margins and pricing. See, the in spite of all these hurdles, we have maintained the 20% of the EBITDAs. We should aim better than this, not if not less than this, we should go better than this in the margin point of view. And as I said, in 2027, not 26, I'm telling you 2027 end, you will see this 3,000 crores turnover definitely because all these plants will be coming to the stream, including the acetonitrile, and some part will come from the subsidiary also. The brownfield will finish by end of this year, and even greenfield also will start by the end of the year.
Trends are you seeing on the destocking side of things? Talk to us about that. We've been talking about this recovery in specialty chemicals for a while now, but that's not reflecting, sir. So give us that perspective.
Because of the volatility, you're well aware, you have seen what is happening every day. Yesterday, Trump said 25%, today is talking different. So this volatility is also giving some doubtful things for the buyers. See, I'm selling almost 10 to 15 containers of my material every month to USA. People who bought few weeks back, they are in a puzzle. What will be its duty when it arrives at their doorstep? So these type of volatility is giving some pinch to the customer end, but definitely there is a good days coming for the specialty chemical, because Make in India, what we are talking for the several years, we are all, Hersh, I will be very, very clear with you, we are creating the capacities, just waiting for the opportunity.
So who bears the tariff? Give us that perspective. Who bears the tariff? What are your conversations with your clients suggesting? Are you expected to do a lower margin on your product, bear some bit of that tariff, or not at all?
No, it should not happen, because earlier there was 0 to it has already come to 10%. There also we have maintained these margins. In fact, the day before yesterday, we were talking to some of the customers, overseas customers in the USA. They were saying that in this 25%, we are not asking you to compensate everything. They are also ready to forego to some extent. And it should be win-win situation. We may go for some 2 to 3% reduction from our price, and they will also going to bear whatever the new tariffs have come.
Mr. Reddy, so talk to us about the Greenfield project when it comes to, Balaji Specialty Chemicals, number one. And number two, I mean, you were in talks when it comes to, IPO of Balaji Specialty Chemicals. So any update on that?
IPO I cannot say right now, because that will be with the hands of the board of directors of Balaji Specialty Chemicals. That only can tell you, but we did not have any discussion on that. Once we finish, as we said earlier, these greenfield expansions, which will be finished by last quarter of this current year, then you will hear more good things about, because sodium cyanide, hydrogen cyanide, based on these two imported chemicals, there are many other products in the pipeline. So you will see, that's the reason I'm telling you 2027 will be much better. This 26 will be only, these products will be adding at the end of the year. But next year, definitely you will see the good. You are well aware that we don't have any standalone basis, any debt, even working capital also we do not have. Even after finishing this also, we don't see that anything will go for the debt in the current financial year for the parent.
Right.
There may be little in the subsidiary, because it depends upon the plant's commissioning. If we take some break in the plant's commissioning, then there also we will not have much of the debt.
Right. Sir, thank you. Actually, that's all the time we have. Unfortunately, would have loved to continue this conversation, but out of time. But very interesting, again, in terms of both guidance and perspective. Thanks so much for coming in and speaking with us. Out of time, from Varsha, myself, everyone who puts the show together, thanks so much for watching.